If you do have the ability, try and encourage yourself, try and take profits around those 2.618 levels. You might not see it in the short term, but you actually see it over time that the market actually ends up rolling over and failing at that level. If you just did simple Feigenbaums and you said, well, probably odds are we top out at 4669s, you'd look like a fucking genius right now. Could you argue that in the short term, the bullish momentum has abated? Yeah, I think so. RSI's now got a double top working, so we all know RSI rules. If anything, a really good example, Brian, when he uses RSI, if you see the first M that comes in, that is not actually a sell signal, but that is a signal that the bulls need to cool their jets. So unfortunately, of course, the public always comes in and buys up markets. And of course, the public probably came in and panic bought all of this. And then to add insult to injury, of course. And actually, it's interesting that the script, is it working here? Oh, there we go. Willie. Yeah, okay. So Willie, yep, you can see it's divergent. It's interesting how this is not picking up the RSI divergence there. You can also see that there is a volume impetus divergence. The bulls are threatening to fall asleep. But the issue here is inside bar failure. So you can actually see how that's playing itself out. I don't think that should surprise. This is why I like using these moving averages. You can see how 13 EMA is probably going to act as short-term support in here. And if anything, I would expect another push higher here to actually carve out the volume top. Right now, we have a push to new highs, and then we just have like literally a vacuum on the other side. I don't think the market even knows what it wants. I definitely think that, the trending signal, we started to trend higher right here. So I certainly wouldn't be in a hurry to say that the trend is down. I don't think the trend is down at all. Having said that, what is the level that we should expect this thing to pull back to? At any given moment, at any given time, any day, you just should expect it to happen. Very good, Michael. So where does that come in? Oh, what a surprise. There's your 13 EMA. So is there anything really out of the ordinary going on here? No. What I often see happens is the market sort of it's almost like it establishes ranges and then it'll sort of be stuck, especially with these Feigenbaum kind of things. So I think that this was a range establishment here on this breakout here. I don't want to be in this range anymore. I want to be in this range. Notice how the market actually punched above it. And then if this was a bullshit move, notice the pullback, right? This thing would have failed here. And then, kind of like what I showed you on the, what was the name earlier that we were looking at? Where it like literally topped out after the fact right on that 2.618. And actually the little stock that I was trading earlier today did the same thing. It was so cool. And if anything, just if you do have the ability, try and encourage yourself, try and take profits around those 2.618 levels. You might not see it in the short term, but you actually see it over time that the market actually ends up rolling over and failing at that level. FULC, enter. I think that's all it was. Yeah. So notice now, look at how 2.618, now the price is actually below that level. So great example where the market rallied up into it. And actually look how we've had to fill in this gap here. And now we're fading away from it. So that sometimes happens on initial test. But also notice too how it worked its way above 2.618. Probably if we wanted to go down to a lower time frame chart, you actually see that some sort of M came in here on some sort of a divergence. Maybe if we go like 30-minute chart. There was the push to new highs. Probably don't see it until you go down to like lower time frame. 9-minute probably we see it. Yeah, there you go. So really good example. Draw your 2.618s on your charts. We come into that level and look how the market actually, and this is incredible. You can't write this better. Holy free holies. I mean, this is a perfect example. So market comes into this level, all of a sudden divergence, bells and whistles start going off. You should look at your indicators, right? I just have RSI on here, but just absolutely incredible example of RSI divergence. And then notice how the market actually, oops, yeah, let's get rid of that. Look how the market actually put in the M right on that level. I mean, look at that fight right on that level. It's absolutely perfect. Really good analogy. So same sort of thing. I think the market worked its way up, and you notice that if it was going to fail at 2.618, it came back down against it, and then we resolved higher. And quite often what I see happen is, if you can get some off at 2.618, great, wonderful. If it can actually consolidate around this level and then accept higher, the next stop's usually 4.669. And that's exactly what I think happened here. Boom. Probably if we drill down to lower time frames, this move, both this move here was on a divergence and it had to get cleaned up through this. And then I bet this move was on a divergence. This is 4.669. Actually, interesting what they did here, right? Look at that. So this was like some sort of fat finger. And you might even argue that somebody really wanted to get a trade-off up top here. You could even argue this, the huge fat finger move, the big dump. Of course, anybody who chased, all these guys sleeping on the couch. What do you think the odds are that this topped out at like 78.6 of that range? I bet probably pretty good. Oh, look at that. Oh my goodness. That's ridiculous. So close. So, and then look at all the divergences starting to form up top here. Probably if we go down to that 9-minute, we see a whole bunch of them. Look at that, 5 different divergences. I don't know whether that's the same level though or not. No, here we are. Oh, so there's only one. OBV div. Oh, that's interesting. So anyway, 4.669 was clearly rejected here. No doubt about it. Interesting analogy of the market coming into 2.618, having to consolidate, then breaking out above, and interesting how we just went straight up into that 4.669. Suppose if you're trading off of lower time frames, you could even maybe do something like there to there, and then do chaos and 2.618. Wow, what a surprise. So I think you can actually explain a lot of what's happening here with Feigenbaums. And then, as we come into the levels, if you start seeing divergences and stuff like that, just be careful. Interesting now on this move to new lows here. Look at that. We got 8 different bullish divs coming in here. So my hunch is the sell-off here is probably near some sort of conclusion here on the short term. I wouldn't even be surprised. We did do this. We did reload zones to the upside, but we could probably do exact opposite and reload zones to the downside. There's basically the bottom end of the range right in there. And we go reload zone, and sure enough, this is basically playing with Mountain Man. I don't know. My hunch here is that there's an A, B, C, D that needs to take us back down to 2.618. Like what I was trying to say there earlier is, we get the W, and that means the market's breaking out. It's establishing a new trading range. Should come up, play with 2.618, then ask itself if it wants to go to the next trading range, which is 4.669. Then we should see, a consolidation here. And if it can hold this range and resolve higher, exactly like what you saw here, then the next stop is 877 to the upside. And of course, if that happens, then all of us who basically bought down around these levels, and in hindsight, I mean, this is basically where I'm long from. That's not a terrible level. I think I've told you before, quite often when I draw 78.6 is what I find over time is the bottoms actually come in right off those damn levels. It drives you crazy. I don't know whether this is the best example of that. I think also too, like A, B, C, D, this is a good example of how those harmonics really need to play out. So if we zoom back in on the short term here, we had this crazy ass wick. Wicks and tails like to be 2.618 off of this Feigenbaum. All you day traders, lower time frame traders, you just got a gift there. Might even argue that that was a good sort of swing trade. Just eyeballing this, again, really good conversation about trading ranges. So market, if it was done rallying, you can clearly see that we would have gone up, down, up, failed, M top, rejection off at 2.618. And then we'd be stuck in this original breakout range. And I think that makes sense. See that all the time. So I think that's the same sort of thing that's happening now. We accepted above 2.618. We went up to 4.669. we now have our new trading range. And notice reload zones off of this range right now are basically right in wicks and tails. I mean, Jesus, it's stunning when you look at this stuff, when you can just sort of stand back and just, don't take a jaundiced eye, but just, just start drawing levels. It's remarkable how this stuff all starts sort of lining up. So you can sort of see there was the reload zone sort of ping pong range. So if I was talking trading range with people, I would say that this is your selling zone and this is your buying zone. And now with the inclusion of Feigenbaums, I think you can make the argument top end of the range, 4.669, bottom end of the range, 2.618. Or in essence, think of this as almost like if this is a bull, right, and we've established the floor down here, think of this as almost like stairs. So there's one stair, there's another stair, and Carpenter didn't do a very good job, kind of choppy. There's another stair. So now the question is, do we come back to this level? If we can resolve right in this range, then and move higher, then of course your next stair should be up at 877, all the way up there. So that's what I think's happening here. And you might find that this pullback is actually right back to this 2.618. This is the bullish scenario. And I suppose we could start drawing bullish BoT setups. So, ideally, if this was a bullish BoT, I mean, we have the W bottom, then, you take your, if this is a bullish BoT, you're going to take your fib tool and you're going to put your BoT setup levels. 30 has to be at least 33%, no more than 66. So you can see that we actually have done the 33%. So this could potentially be a BoT. And now, if these are the levels that ultimately play out, then we'll take the AB part of it and we'll do CD. And so that would be like, try and help you see this. We'll go there, and go A to B, like so, and then clone that and go C to D, something like that. But you all know, because you're fans of the BoT and you think it's just so awesome, and we can't just start talking about this trade with one low. In fact, what I would probably say, we'll redraw this, is for this to actually be a BoT and for us to be thinking about next trade setups. Actually, this looks like it's setting up nicely too. Got one high, two highs, three highs. So we actually have a valid trend line here that's working away. It actually looks like it kind of confirmed there. I don't know whether it did it. 166 and then 168 and 160 even. So yep, it did confirm. So that's valid and it's working away. In actual fact, up, down, up, break. This one actually confirmed right there. So yeah, that's a very valid trend line. There is the BoT entry level. And notice, here is, we want to be buyers down in here. We want to be sellers up here. If this is a BoT, then we're going to want to see, we got one low, break the trend line, two lows. Here comes our W, three lows, and away we go. And ideally, we'd love to get a nice W below the BoT entry level so we can front run the BoT. And notice, isn't this super cool? Notice how the BoT level just so happens to be the 4669. And it would be really interesting to see whether 877 lines up with the ABCD objective. Let's see. Survey says, oh, you can't write this shit any better than this, right? Do you see how cliche this universe is? It's stunningly cliche.